This is Bloomberg Markets. I'm Caroline Hyde in London. Let's get a check on the markets now because we are swinging between gains and losses. It's time for futures in focus to get more perspective on all these market moves. I'm pleased to say, amid the volatility, the dollar has been giving up the gains as oil has been rallying. Bob Iaccino of the Path Trading Futures joins us from the CME. Bob, first of all, what do you make of the volatility in this market? Because when I was looking at S&P 500 futures earlier today, massive swings, particularly on the back of Mnuchin headlines.
Yeah, good morning, Carolina. The S&P itself, I think, is still stuck in this sort of end of year. This is the first time in about 10 years, I think, we're seeing actual tax selling. And while I believe a lot of that may be out of the way, there's certainly no reason to buy the market. A little bit of rebound we got is definitely just speculative futures traders trying to get a little bit of a leg up on the new year. But I don't know if it lasts today. It was good to get those sort of mild words of confidence from President Trump on Treasury Secretary Mnuchin and Jerome Powell as well, although I had no concerns about Jerome Powell. He doesn't have the power to fire him. So it didn't bother me one bit. With the Powell, the Mnuchin stuff bothered me a little bit, and I was happy to see those comments this morning.
Okay, so even if the market may be not as relieved as you are, what then of the US dollar? If you never think Jay Powell was going to be moved off, but we've got those, once again, strong comments coming from a key Trump aide saying he's 100% safe in the job. Does that mean the dollar goes lower into 2019 as they take their foot off the gas in terms of rate hikes, or are you still expecting 2 next year?
Well, if you look at the dollar index, at least lately, it's been more about the other currencies to me. The index itself has moved in about a 1% band. Take about 96.50 on the dollar index, and we've gone about 1% above and below that for quite some time now. But yet you're seeing the yen extremely strong. You're seeing the euro weak now on the backs of comment from ECB Governing Council member Lane, who said risks are now to the downside. We've got Brexit. It's more about the moves in the other currencies in the short term now that that December meeting's out of the way. That could change with all of the various press conferences we have at the upcoming Fed meetings. I expect a little bit weaker of a dollar unless the world economy just goes all to heck and we just see this sort of flight to quality into the dollar. We're seeing that in the yen. We haven't seen that in the dollar yet.
Talking about going all to heck, WTI crude, that's one way of sort of summarizing it. Currently at $44.35, a bit of a reprieve today, but is there any sort of bottom to the oil market, do you find?
I think short term we may have hit the bottom, but overall the bear market's got to stay in place. Some of the pipeline issues that we had mid last year are starting to resolve themselves. About 300,000 barrels of additional pipeline from the Permian is ready to open mid-January. Seaway is taking Gulf Coast from Cushing to Gulf Coast orders for 2019 with an additional 100,000 barrels in that pipeline. And Phillips 66 is expanding their pipeline capacity by 100,000 barrels. That's due out mid-2019. So you're starting to see that alleviate. That's more supply, although OPEC is talking tough about maybe having an extraordinary meeting. I think they'll need that meeting sooner rather than later to stop the price slide. But in the short term, I think low 40s is going to be it until we see which part of that fulcrum bends.
Well, Iaccino, great to get your perspective today. We thank you, Path Trading Partners.